Alright guys, so in this video we're going to cover some more trades from the GJ, from the UJ, and some key points in the market, things that you have to work on as far as your technicals and assessing the best positions to get in from. Remember that what I teach here and what you do on the chart seems simple. It seems nonsensical, like you're just drawing a line and you're waiting for that price. If it stalls there for an hour or two, you're going to take the trade. It's not that simple. Yes, those are some of the steps you have to take, but you have to think past just doing it and think of why you're doing it. Why am I getting in from this position? What's been going on in the market? How has the market been moving? What pair am I on? Am I trying to do this on the UJ that's slower or the GJ that can do pretty much whatever it wants? What's the probability that I'm going to win this trade? Is this a great trade or is this a flimsy trade? What kind of risk should I apply to it? If I know that this is a reversal, should I risk my full normal risk? If I normally risk a standard, should I be risking that or should I lower it to $3, $4, $2? Right? You have to think about these things. Remember, you are an investor in the market. If you had somebody trading your money, wouldn't you want them to assess the risk, the reward to trades? Wouldn't you want them to make sure that they're getting in for the right reasons into the market? Wouldn't you want them to do their due diligence with care and detail before they actually entered that market? So let's get into it. For a while now, we've been buying on the GJ since August. So I'm going to do some scrolling here. This is not going to be an edited video, so bear with me on the scrolling. But we've been buying for a while. We took the buys when this all started back in the beginning of September/August. So if I scroll all the way up, you're going to see this is where we kind of started September the 3rd, where this first uptrend started, the first bullish run. If one of the past videos, I believe I speak about this one, but we're going to just stick to this. September the 3rd, 142,693 was the price that I called. 142,693. I remember distinctly I was driving, but I sent in this mobile screenshot, 142,693 for buying opportunities. Now, alongside that, for those of you in the Telegram, you know this. We're in the group chat, another group chat, the feedback channel, and what we do in there is we give our assessments, our mindset towards things, how we're looking at the market, and it's kind of a rundown of what we're thinking about as the trades are playing out and as the days are passing by on those trades. Because remember, not every trade is completed within a day. That's just not the way it works. So when we do that, what we're doing is what I'm asking you to do on this video, okay? The details. I'm asking you to assess the details of the market. Remember that the candles are the indicators that are giving you the analysis of the market. They're giving you the sentiment of the market. That's the keyest tool on the screen. When you use those candles to your advantage, when you actually take the time to break down those candles, you're going to have an easier time. So we're going to just cover some of the GJ uptrend. We're going to cover some of the GJ downtrends that happened that we also called out, and then the massive downtrend that happened yesterday. Yesterday's downtrend was 250 pips, and we were there for the whole thing. Okay, for the whole GJ downtrend, we were there. So let's see if I can find this screenshot. As we work our way there. Right here, okay? So we called a downtrend for the GJ. We wanted the downtrend. I wanted the downtrend more than once last week, and we were able to do that. Now, if you look at it, one of the zones was perfect, right? One of the zones worked out just fine. The other one was the one that you had to adjust and figure out whether or not you wanted it. So we're going to talk about all these things via detail work. I'm also going to throw Fibonacci's in here. For those of you who are watching this video who have not been taught the Fibonacci method or how to use the Fibonacci's, just try to understand it. Eventually you will understand it. You're going to have to rewatch this video anyways. If you're a person who only watches videos once and you move on, you're really not understanding how many times you have to repeat something in Forex itself to actually get it. Right? This is a game of repetition, robotic repetition, where you try to gain those types of detailed habits over and over and over again. So if we look at this market, let's get going. 142,693. It's right 142,693 is right here. Okay, when the market, we had ended the month of August with buying. Okay, now I need you guys to understand this. A lot of the times when people see trades, they perceive it with their own bias, right? So like if somebody sees me buying from here, they may think that I'm reversing. But if you look at a higher frame, am I reversing? Since the last couple of monthly candles are bullish. Okay, so am I really reversing, or am I on a continuation pattern? Or am I in a consolidation pattern? What I do know, though, is that it's a key level. Because where this trade started, is down here off of monthly levels. And you don't even need a monthly chart to check it. I barely check the monthly chart. The weekly is the one that we check at the beginning of every week and the end of the week. We assess those key levels, and you look at where this started, key levels. Okay? There's a lot of support here for the uptrend. After so much downtrending, you knew it had to end. So you can look at it two ways. Either it's a reversal of the most current movement of the market, which was that downtrend, or it's an uptrend for the continuation of the longest term trend that we've had since September of 2016. More importantly, what it is a key level. What does that really tell you? It tells you that it has fuel to move this trade and give it some real giddy up. You're not on a bicycle here. This is not a trade where you can only get a couple of miles on that bike. This is a trade where you're in this Mack truck and you're about to go cross country. You're about to hit that last stop. You are on a long ride with this trade. It's going to have some fuel. Now, the only thing you have to worry about is actually getting in from positions that you can survive the retracements and the corrections before it continues on path. So we've been buying here, and the market from this position had already went up 515 pips. Now, a question you may ask is, what's this trend line? And the response that I'm going to give you is, who cares? Who cares what the trend line is? The trend line does not matter to you right now. What matters to you right now is, as this market moved up 500 pips, do you enter for a buy, or do you start looking to sell? Now, personally, I was looking to sell from this point. All right? I don't think it happened. I don't remember. It's too many trades. But I don't think it happened. It was too fast for me. Maybe, maybe not. I have no idea. But for the trades that where we're going to start, I started looking for a buy at 142,693. Question is, why? If I go to that H4 frame, which is my favorite frame, and you guys know that, for those of you who are on session, H4 is my favorite frame. I look at the way the market's developed, right? So we had that strong bullish run of 500 pips. This is me assessing the details of the candle and how my mind works when I'm about to trade, okay? No fibs included, no trend lines, no EMAs, no anything. I'm just looking at the candles and where the market is showing me the most order pushes, where I'm getting the most volatility, the most volume, the most liquidity to actually take my trade in the direction that I want. And I don't need to know price. I don't need to know anything right now. All I need to look at is the candles and the details they can provide me, which is a huge chunk of what I do. And it's the reason why I am so comfortable flowing with the market, because all I do is look at those candles. That's it. So when I looked at the way the market was working, we had already seen all this bullish push. And at some point, I needed to know where I'm going to get in from. So what did I see? I saw the fact that we were starting to come back. We were probably somewhere here when I saw this trade. And I asked for 142,693, which was down here. Why down there? Because I was looking for only 3 spots. That one, this one, or that one. One of those spots was going to give me the trade I desired. So what I did was I went 1 frame lower, and I really looked at it, which was going to make most sense. So I popped a line there, there, and there. Then I stopped and I looked at this chart. What makes the most sense here? Now, if you know me, you know I don't believe in exact price. I gave that exact price because I couldn't give out a properly marked zone because I was in the car and I was driving, and I hate marking up on the mobile chart. So I gave an exact price of the price that I believe was going to make the most sense. Now we had reached 142,693, but that's the actual price that I wanted to stall. And if you look at it, if you look at this market, so we're going to go 142,693, okay? And you look left, what's there? What's there is from here to here is a 11 pip zone. What I wanted out of 142,693 was the respect of this continuation right there. This little BS zone, this little BS candle right here. Because what happened was this was the last little support continuation. I know it's a small detail, but it's a detail that I liked. When I looked left, I saw this struggle here in a similar area. I saw this support here in a similar area. I saw this support here in a similar area. And then I saw this in a similar area. What is that telling me? It's telling me this price is important. For whatever reason, they like it. They like it. They liked it here to resist it. They liked it here to support it. And here to support it again. This is really tough to get this really accurate. Right there, Jesus. They liked it here, and here, and here, and here, right? In that general range of 142, 693, 653, 673, somewhere in that 10 pip zone was the entry. I liked 693. That was the price that I liked. Markets closed, that was that sound. So when we got in, automatically we had trades. We had 45 pips, 36 pips, 93 pips, and then eventually 230 pips. All due to detail work. Now, what else could we have done? We could have drawn a Fibonacci from that low where this trade started all the way to that high. And then what do you have? 50.5, which is a great continuation spot for a higher frame Fibonacci. It is a higher frame Fib, even though I'm drawing it on the H1, because if I go to the higher frame, it was the move of the weeks, right? Here to here. It's that move. We had some strong support there. Now, at what point are you really like, that's it, man, I got to get into this trade? You have to. All right, let me go scroll back. By the way, I'm using my other computer because my actual trading computer, the one I make videos on, is messed up. So I got to use this one. And I actually kind of like it. So you had a trade here. You had another trade here. You had another trade here. Then the market comes back and gives you another trade. Look at it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. 21-hour candles in this particular area, stalling out for you to take the buy. Why is that something you want to do? Why is that something you want to wait for? Well, because you did have a monstrous sell. And you had a match of this monstrous candle, and it returned back. So you want to give it the respect it deserves. You want to hit that level that you've been trading from. You want to make sure that your trade has enough fuel, at least 200 pips of fuel, to actually carry you in the direction that you want. For some of you, that's 30 pips. For some of you, that's 50 pips. For some of you, that's 100 pips. I don't know. It's what your preference is. But what I do know is that that spot with proper entry was giving you the pips you desired. Now, as this market continued, we started to create new structure. Highs becoming lows. Now, here's the problem. I mean, this is another trade that we took. This is nothing. This is easy. This one right here is easy money. All right? When you looked at the trade, the highs started creating support, 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 and then it was gone. Personally, what was I doing? I bought, right? And then I cut it, and then I sold, and then I cut it, and then I tried to sell again, and again, and again, and then I stopped. Why did I stop? Because we've been so bullish for weeks. And then now, what are we doing? We're creating higher and higher positions. We're getting closer and closer to that high. What is that giving me an indication of? A breakout, something I do not want. Now, I should have been continuing the buy, but for whatever reason, at that point in the market, which is always easy to say, oh, you should have been buying. At that point in the market, I was liking the sell. I wanted another retest of possibly down here to give me a lower low, but still a new high to continue the uptrend. That's what I was looking for. That's not what we got. So I took sells, and the sell was pretty good, 120 pips. And then another sell, probably for 40, in a move like this, probably like 40, 45 pips. And then again, and then again, and then obviously if you look at it on an hour chart or a 4-hour chart, what you're seeing is the market is slowly climbing up, candle by candle by candle, until finally it breaks this high as she's gone. And then continuing the slow climb up. Continuing the slow climb up. And it's going and going and going. And last week, what were we doing? Selling. I was still selling. I only took one buy last week, and it was this one. All right, I didn't take the whole thing. I took it like to here, 80 pips, something like that. But last week, most of my trades were sells. And I still won the trades. Why? Positioning. Where I'm at on that chart. So we're going to go to this higher frame real quick. I look left. Okay? What do I have? A sell opportunity. Boom. There's your sell. Also, within that same day, we took buys. So the market, I sold it. Okay? There's the sell. In the Telegram, I said 147. Let's see if I can find this. Scroll, 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 scroll. Scroll, 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 scroll. Almost there. And if we stall at 147.4, where does it? If we stall at 147.4 to 147.3, or if you're looking to buy 147.3 to 147.4, I'll be looking to buy back up to the top to at least the retest. That's what I was thinking. I at least wanted the retest. Where's 147.4, 147.3? Right here. What did we get before right before I said that? What did we get? We got this. The strong bearish candle. Why did I want to buy after taking a sell? Because I like to flow with the market. But I'm always thinking about what I said in the beginning of this video. What's fueling my trade? What's fueling the trade is a buy. What does that mean? If I'm going to take a sell, I need to be extra careful. Always looking for those clean, better prices or equal prices. Not trying to take low price continuation trades in a buy market, trying to sell from an area that does not make sense. So I'm trying to go as high as possible to sell. If I want to buy, that's much easier. That's the truth. Because if you're buying in this market, you're going to have an easier time. But for me personally, a lot of the buy positions that I was looking for before this one, they kept missing. Right? It never really made it there. Like one of them was here, and it missed me by like 8 pips, my pending orders. If you don't know how to do a pending order, you right click, you go to trading, and if you're trying to take a buy, you hit buy limit, and what it'll do is it'll create an order here. The market will go through it, and then what you're looking for is for that buy limit to trigger and for you to go up. You're putting a limit order there to continue this trade in the direction that it's intended. So for this, a buy limit would be under price. You want price to reach the order, and then you want the market to go up. If you were to do a sell order, which is what I did here, okay, you go, well, what I was trying to do here, and it missed me. So I had my order somewhere here. I right-clicked, I hit sell limit. It's not going to do it right now because the market is closed. I hit sell limit, and then I wanted the market to come here, hit the order, and then drop. Now I was actually watching this market. I manually entered upon confirmation. Right. Once I got the 3 bearish candles, I'm entering this market. But I wanted it to kind of hit here, wick really fast, and then drop. So I had an order here waiting. Right click, sell limit. It'll leave an order there, and if price meets that order, it'll trigger it. And then what you want from there is for it to just drop in your direction. So the reason for 147.3 or 147.4, let's look left. What do I see? Detail work. The 4-hour chart is giving me the obvious trend, right? What is it saying to me? Listen, Gustavo, listen, trader. We had this high. We took this trade 100%, took this sell, and then we worked up, and then we tried to drop again. And we took that trade as well. And then what happened? It came right back up, supported there. Look at this area. It was a high. Look at the sensitivity of this area. Price importance. Right there, right here. The wick created. What is that telling you? What is that telling you? It's telling you there's a lot of buyers support here. They tried to sell through it, and it still brought it right back up to that price. That's the preferred price. This right here is the preferred price. All you had to do was trust it. So what I called it, see, by me being an admin in the Telegram and me being a coach, I have to put myself out there and give you my thought process before things happen. That's the whole point. So when I called 147.3, all we had done was created this wick. Nothing else had happened. I think we were a little higher than we should have been. So I was literally telling you to wait for the trade. Do not react to this candle. Just wait. The market comes back down. Now it's ready. And 1 hour, and 2 hours, and 3 hours, and then it pops up. We took this trade. All right, 52 pips. Then it stops. And then guess what I did? I took a sell. Why? Because of this strong bearish candle that broke through, and I wanted it to support right there. Looking at 1, 2, 3, 4, 5, 6, 7. How do you guys get those prices? Kazis. That's how you guys get them. Kazis. Now, the Kazis doesn't always do it perfectly because it is an indicator. Nothing is ever going to be good as your eyes and your detail work when you're sitting at the chart. But the Kazis are pretty good at picking this stuff up. I don't have the Kazis on this computer, so I can't actually provide them to you. But just know that if you go back to your personal charts, you're going to see Kazis as applying demand in this area, right? At least in the history of the market. It's telling you that this is a good spot for you to pay attention to because the money is here. And if we actually go in the direction you intend, you're going to get some kind of push here. Enough for you to actually profit. So we took the sell. Boom. What's the reaction of the market from that spot? Another wick and then a stall. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It comes back, does it again and again and again and again and again and again. And then the trade. 223 pips. Now, I'll be honest with you, as I always am. We hit the retest area that I wanted, which was this one. This is where I sold from the day before. And this is where I sold from the day before. We hit that spot, and we kept going and going and going. And personally, what I thought was, okay, it's going to come here and kind of mess around. It's not worth it to me. So 80 pips. Boom. We're out of there. And then the market kept going and going and going and going and going and going. And it just never really stopped. So then at some point, again, looking for the sell. Looking for the sell. Now, why am I starting to switch the bias to the sell? Why all week looking for the sell? Well, in the back of my mind, what I knew is we've been going in one direction and we needed that correction. It needed to get there. But what does that really mean? It means, Gustavo, you're going to sell from areas that make sense. You're going to look for higher prices and better prices. You're going to respect if wicks like this one get filled up because it's going to keep going. You're going to respect if wicks are created on the bottom because that means that you still have more buyer power to go. You're going to respect the fact that the market is in a buyer's pattern. And if you take a sell, you need to lock profits. You need to get in from positions that matter. You need to assess the market correctly. I cannot impose my will on this. Okay? So when Friday hit, I was still looking for that correction because that's the way I am, right? It worked here. It worked here. We took buys. So what we have to do now is we have to wait for those best prices. And this is the way that I did it. I drew a fib from the most recent sell point to that buy point where we bought. Just like that. Well, I'm going to go a little lower because it's not just like that. Even though that one's pretty, I'm going to be exact right there. Okay? That's how I drew my fib. Look at it. What do we see? We see that retracement zone up here. Okay? We also know that there's key price right here. Right? A price that gave almost 1,000 pips of drop. So there's something here, right? And we have not received any correction, and it's Friday, and we've been so one-sided, and everybody and their mother has been buying. Now, I was expecting about 100 pips out of this trade, and we got 250 pips out of this trade. Now, there may be some newsworthy reasons why, but at the end of the day, it was all about positioning. Now, something that I said in the group chat was expect manipulation. Like that 149 price, expect manipulation. 149.25 was the price that I was really looking for. So if you look at my entries on Instagram, one of my entries was here, and the other entry was like right here. Okay, what was I waiting for? I was waiting for the first higher frame H4 intra-session bearish candle. I needed it. So this entry, I jumped the gun. That's the truth. I jumped the gun. I actually missed the fact that we created a wick there, right? This is like, right here is Asian going into Asian session. So I missed that detail, and I do not care about saying that. It's the truth. Every now and then, you're going to miss a detail. You can't get them all. It happens. So I took this entry, and this entry, I had to spread out my stop loss to like 45 pips, which I rarely do. I rarely ever do that. So I had to spread out my stop loss. It gave me an opportunity to break it even. I got back out, and then I got in slightly higher. That's how I worked it. So it's slightly higher by a couple of pips. Then the market gave me that push up, and I had to go to a higher frame. I already knew and understood what was going on here. We were getting manipulated. That's how I felt about it. So I had other prices in that particular zone where I believed they would try to catch orders. So on the lower frame, it looked like that. This whole thing was one big cluster of selling orders. That was my view on the market. I just knew they had to shake off all those people trying to sell, and they had to try to shake in some of these buyers to make them feel like we were going to keep going. If you're trained by me, you don't take stuff like this. This is a sucker's play. To buy from all the way up here is a sucker's play. 100%. All right, so we took the sell. Fibonacci's did help, taking that reverse Fibonacci and looking for that retrace zone, which is a video I'm going to make over the next coming weeks. I teach this on session, but I am going to make this video because it's been requested, and I actually really like doing stuff like this. Like, I'll show you another example. You could find the same Fibonacci going on trend, but I like right here, boom, right here, boom. Okay? So I like doing stuff like that. Looking at old reversal patterns, drawing the fib on them, and finding the other retracement zones if we get those strong continuations. And if it coincides with other strong areas of price where you mark the Kazis and subdems and things like that, then you know where you should be seeing a struggle. At least expect it. You don't necessarily got to take the trade, because I would always prefer for you to be on trend, but you should know where you're at structurally. Structurally, you should know what should be happening in these areas. And if you break through, it tells you, listen, this has more giddy up. Respect it, hold the trade, whatever it may be. So for this particular trade, I drew the Fibonacci. But even if you didn't draw a fib, what you had was a strong price area of resistance. Now, the zone that I drew up was a little early. It's true. It's a little early. I'm only trying to give you and myself an understanding of where I'm at on the chart and what I'm looking to do. So when I got in at 149.25 and jumped that gun, and I had to adjust it a little bit by getting out and getting back in, which is okay if you are a live trader, I was trying to get in as close to this high as possible. That's what I was trying to do, right? And then what did they do? Higher high, and then boom. It shakes everybody out. It makes the buyers get in. It does a whole bunch of things. It increases the volume and liquidity of this trade. And you had to expect at least 100 pips out of this trade. 100 pips was to the breakout point. That's what I was at least expecting out of this trade. Now, what I got was 200 pips a trade to where we started that previous day, 147.3, 147.4, like we said before. Okay? By the way, if in this video I messed up the price, you get what I'm talking about, man. And that happened to me in a previous video, and somebody called me out on it. You try stating 30 prices a video 20 times a day, okay? So we're going to move forward with this trade. The trade goes 252 pips. I only caught 200 pips of it, and I cut the trade. Why? H4 candle wick. That's enough for me. That's enough for me. On a Friday, I'm good. That's enough, okay? So 200 pips. All that you had to do was get in, right? You had to worry about this. So, Gustavo, I have a 30 pip stop loss. Stuff like that, you know, it's rough. It's rough for me. It's rough for the market. Have to stop me out. I have to be extra precise. Widen your stop loss. Widen your stop loss. Decrease your risk. So let's say you're used to, if I'm used to trading at a couple of standards, here I'll probably put $6. All right? If I put a standard in there, okay? And normally in a trade like this, I actually have 3 standards stacked up. I'll keep it at a standard. One standard. One lonely standard that still makes me $2,000. Do I really care? And then I caught a really nice trade. I inside of my experience bucket, I put another token in my experience bucket. I have another piece of information that I can use for future trades. I am one trade better. Does it really matter that you didn't put the full risk on this trade? If you're used to 3 standards or $3 or 30 cents and you put in 10 cents, does it really matter? It's one trade. Oh my God, I didn't make my $1,000. Who cares? Who cares? There's more trades coming, I promise you. There's trends like this one, I promise you. There's mini trends like those, I promise you. It's coming. Who cares? All you had to worry about was being in this trade. So, for my example, popping a standard in there. And if my stop loss is normally 30 pips, which equates to $273.45 of loss, then I'll put in $3 or $5. I like that 30% number. When I want to be in this trade, but I know it's going to be heavily manipulated before it goes, like news or something like that, I'll do a 30% risk. Doesn't matter. All that matters is you caught those pips. That's the point. All right? Now here, for this entry, was a 30% risk. And for this entry was the rest of it, 70% of the risk. So when it drops, you got a whole trade there. Now, as the trade was working, you have positions you had to worry about. So this area right here, had to worry about it. This area right here, had to worry about it. And this area right there, had to worry about it. So how did we know that we were going to go at least 100 plus pips? And if you follow me on Instagram, you were following me as I was letting this trade play itself out. So the first move was the hardest one. That one, 67 pips. That's the one you had to really worry about. Because if it broke that, high probability that we were going to keep going for the rest of the 100 pips. So what I did was plus one, right? And then kept this stop loss right there, right here, okay? I didn't want it to come back and test this price. I wanted it to keep going. What did they do? They dropped the market all the way down. They never even got back to where we started, and they just kept going and going and going and going and going and going. To the next spot, which is this one, going and going and going and going and going. Once it broke through here, which is the area where we got the 100 pip drop and we took this trade, and then we got the fill up of this and caused the rest of this, This area right here, highly sensitive. So when we broke through it, it was gone. You knew it was gone. And that's when the rest of the trade actually happened. It's all about those hours continuing. If you're watching this on a 15-minute chart, though, you're crapping yourself. Why? Because it's a lot of candles that you're watching manipulated in different directions. So here you had the break, right? Market comes down, and here it glides up. What does it look like? It looks like it's ready to come back up. It looks visually like, oh crap, I'm in trouble. And then it goes down again, and the bullish candle starts again. And then it breaks through. If you watch stuff like that on the hour chart, it's an easier time. Now, you're not supposed to be staring this down with one eyeball barely on your screen. What you're supposed to be doing is just waiting for those candle closes. I say it in one of the videos on my Instagram. Waiting for candle close. It's not something I say for you guys that I don't do myself. What I tell you guys is exactly what I do. I cannot watch this chart on a 5-minute or a 15-minute when this is happening, because this stuff will make you emotional. It'll make you feel like, okay, it's over for me, right? This trade is done. What you got to do is hour chart it or 4-hour chart it and let it play. Let it happen. Let it develop. Place your stop losses and your take profits and walk away. So what did I do? We started with my stop loss behind price, obviously. And I'm dragging with it. And as the market developed different hour candles, I would just take my stop loss and drag it a little forward. And as it kept going, I would drag it a little forward. So it was here at one point, and then here as we broke through, because I didn't want that retest. And as it kept going, it was here because I didn't want that retest. And then as it kept going, I would bring it here because I did not want that retest. Once we broke through, that's it. I want you to keep going. And I just kept dragging and dragging and dragging and dragging and dragging. So when it was down here, I placed it here, like somewhere here, which was I already wanted to get stopped out, and I've said this in other videos. What have I said? Don't take yourself out. Take that stop loss. If you're about to take yourself out, take that stop loss and put it ridiculously close and see what happens. And honestly, I thought it was going to work, and it brought it right back, took me out, game over, 200 and something pips, 220 or so pips. One of my entries, the worst of the two, I TP'd right here. I wanted that profit. I needed that profit. And also, it was a punishment for getting in early on this position and having to maneuver myself into a better spot and still being in the negative. So it happens. So I sort of punished myself with 130 pips, but I kept going and going and going and going with the better entry, more risk on that entry, and that's the one that we stopped out at 200 and something pips. Okay? So why am I running you through this stuff? Because trading is not ABC. Trading is having a bunch of knowledge and understanding of different scenarios as you grow and your experience grows, and actually applying it in the moment. Like being able to pick out the key that you need to open that door in that moment. That piece of information that's useful for this particular scenario. Sometimes things are as easy as wait for a key price, hour candle stalls, and boom, up, up. Sometimes you need to use a little more thinking, right? Here you also had EMAs, which is something you should be using for your continuation. Like if I put an EMA on this, EMAs are 100% flowing with this market. You know, I mean, the 50, this is the 50, the break right there was that key moment. Like, you don't need the EMA to tell you that, but it helps if you don't know what you're looking at. So, my point with all this is you gotta learn to actually apply what you know to the chart. What do I see most people do? If the candle is bearish, I know I say this all the time, but it's true. If the candle is bearish, they go in, boom, I'm in. If the market is one-sided, they just go for the reversal. You can't do that. If the market reversed here, they'll try for the reverse here. You can't do that. You have to wait for the market to stall and stop for a good amount of time for you to even think of selling from this position. We sold here once. Yes, I know. There's a wick here. Yes, I know. But we've been bullish, man. That's a detail. We've been bullish, going higher and higher. So when you have to wait for the zone and you go to that H4 and the candle looks like this, really? You're not going to let this close. You're not going to let 3 to 4 hour candles pass to create a new 4 hour candle. You're not going to let that happen. You're just going to enter. Really? That's lack of details. The market goes through it. You're still going to be in this? Really? You really think this thing's going to come back for you right now? Come on. That's bad details. If I was to draw Fibonacci on this, looking for the continuation zone, the sweet spot area, right? We got 1 wick, 2 wick, and then no wicks. You got to get out of here. You got to run because it didn't work. So your loss would have been 14 pips, 20 pips tops. Who cares? Get out of the trade. Don't put yourself in positions to take massive losses for no reason. The trade is finito. In any kind of trading, there's going to be losses. You have to account for that. You have to have an exit strategy. Why do I pick 147.3 to 147.4? Because it's ridiculously close to the zone, the bottom of this wick, the key prices, and a buyer's fueled market. So I know that if we go lower, it's an easy cut. I'm cutting. No doubt about it. I'm cutting. Who cares? Here, if I was doing the same thing, guess what I'm doing? I'm cutting. I didn't buy. No way in hell. But if I was, this is another example. Look, the market just dropped 250 pips. Guaranteed somebody out there bought. Guaranteed. No respect for the market and the fuel that's in the trade. Respect it. Friday, day's almost over. You're still going to buy there? Really? Why? Because you need to trade? Who said? If the trade's not there, it's not there. What am I looking to do? Buy from this position. 100 pips lower. That's my buy spot. What would I more than likely be doing coming next Sunday, Monday? Selling. Looking to start these sells. Can it all change? Yeah, because on Sunday we could open with some ridiculous gap that is not expected. So we have to make sure that we adjust and flow with the market. Now I'm going to go over some of the things that were requested of me as far as like quick questions, and I'm going to do it at this part of the video. Pending orders. Do I use them? 100% I use pending orders all the time. It's because I'm not up for Asian, London, and New York. When do I sleep? So I use pending orders all the time. Stuff like this would have been, if this would have been deeper into London, these moves, they would have needed pending orders. I would have placed an order somewhere here, and then one here, and then one here, splitting my risk, right? Splitting my risk. So I would right click for this. I would hit a buy limit because I'm looking to buy. Price is under me, so I cannot do that. But it would look like that, a buy limit. The order would make a line here, and then the market would go through it, and then obviously what I would want is that exactly. All right, for this trade up here, I did have orders, but I was watching this thing like a hawk. I was not missing this trade. I had an order up here, a sell limit, right-click sell limit. What I was looking was for the market to come up, hit that order, and then drop. Now, I manually watched it. Why? Because they shorted that little price I wanted by just 5 or 6 pips, which is manipulation. And then they gave me the 1, 2, 3, 4 bearish candles for me to get into this market for a second time. So orders, Fibonacci's, do I use them? 100% all the time. A move like this one, I draw from the low to the high. It's in that sweet spot, 61.8, 70.7, 78.6, hits that spot, boom, she's gone. I do that all the time, no matter the frame. If I'm going to get in, I always measure because I believe that every chart has structural integrity. So if I go from the low to the high here, where do we fall? Retracement zone. All right. So when I get in, I always draw a fib because I never want to get in on the momentum of any candle. I always want to get in on the retracement of candles. This right here is the retracement of, if I highlight this whole thing, I am using the retracement methodology to enter 4-hour candles. That's what I'm doing. Okay? I am measuring the percentages on the 4-hour candle to make sure I get in from an area that makes sense. That is what I'm doing. All right. You can look at it many ways, but that's really what I'm doing. All right. So drawing Fibonacci is 100% something I do. I also do reverse fibs. This was just a teaser of the reverse fib. I do this a lot. This is like a more advanced tactic, not easy, because if you have questions about how to draw a trend line and if the support line is good and stuff like that, imagine picking the actual move that's going to give you the move you want. Simply put, though, the way I do it is, what's the last move that looks like the one that I want right now? So I'm actually going to clean this up. Goodbye markups. All right. I look for the last move that I wanted. So like, let's say for example, this sell. All right, I do this. This is the last strong sell. So I'll look for my next sell because I'm against the trend. That's why I'm drawing a reverse fib. Or I'm looking for that higher high or lower low, and it's right there, boom, down. Okay? That's how I do it. If I do it again, this one's going to be sloppy. There's that one. And you get the point. If I'm trying to take a buy and I need to know where that lower low is for the buy, so let's look for a buy opportunity. Well, we didn't really get lower lows. It missed. Let me think. Let's go to UJ. UJ is another pair that I've been trading for a while. We've been looking to buy, and last week, the golden zone is the zone that I wanted. It missed, right? This is a new zone that I drew. For weeks, we've been buying this. We've been buying and buying and buying, and then now we've hit a strong resistance. So now I'm looking for that strong retracement. That's what I'm looking for. Looking for that strong retracement for continuation. We're gonna see how that works out. But if I'm looking to, like, if I was looking to actually sell on the UJ that's been so bullish, I would go to the last bearish move, just like that. Just like that, which gives me that retracement and explains the rest. So where would I be looking to buy? Here to here, somewhere here to here. I wanted to get here to here, nowhere else. That's just my preference on the chart, especially UJ, which is notoriously slow. All right, I'm honestly looking at it more like, let's see what happens in that zone to make our assessment for the rest of the months of this year with the UJ. But that's another story. So the reverse fib, I use it a lot. I use it on trend 2, against the trend. You just want to find those key spots. That's what you're doing all the time. When you do the detail work on the candles alone, no Fibonacci included, like stuff like this, you're just looking for those key spots. Stuff like this, I was way too passive about it. Because if you look at it, it's a high, it's a high, it's a high, boom, taps it, keeps going. I was overthinking it. I was just like, I needed to get down here. Does it mean that I rushed the entry and got it anyways? No, I missed it. Who cares? Look at the GJ. GJ gave me all the pips I needed. Who cares? There's other charts. There 100% is other charts and other trades you can take. You don't have to take that particular trade. Okay, guys, and that's that. If you guys have any questions that you want directly answered in videos, let me know. Any topics you want directly answered in videos, let me know. If you haven't traded in a while and you don't know, you don't have the indicators anymore, you've lost the template, you don't have the video list anymore, any of those things, let me know. I will help you. There's no reason for you to quit this game. It can be done on demo. If you don't have money to risk, you can learn on demo. The worst thing you can do is not trade. If you don't like demoing, you could create a $100 account and trade at 10 cents a pip. You have to do a whole lot of losing to blow that $100 at 10 cents a pip. If you're actually trading for the sake of learning and not making money, you're not going to make any money if you don't know how to trade. If you're not comfortable trading, if you haven't been consistent trading, if you're not consistent with your markups and your chart work and your day-to-day, you're not growing experience. There's no way for you to be profitable long-term. You're going to get caught up in different scenarios. The inevitables, stuff like this, breakouts, it's going to happen to you if you're not actually consistent and gaining those experience points. So get back to work. I make nothing off of you getting back to work. I don't make anything. If you quit, you quit. But if you're watching this video right now, get back to work. It's not gonna. What's the big deal? Every day you mark up 1 or 2 charts. You follow the market. You take some entries. You don't take some entries, but at least you're watching how the market moves. You're learning how to mark up the chart. You're learning if you would have been right or wrong. You're learning to adjust. You're watching videos. Maybe you're in the Telegram, whatever it may be. But you have to trade it. But you taking full-on breaks, no excuses, because this markup, I did these markups in this talk in an hour and 30 minutes. This video is going to be like an hour and 10 minutes or an hour and 20 minutes, something like that. So it takes an hour of your day roughly or less because I'm talking on and on about topics. But for you, you're just marking it up. It takes about 20 minutes. 20 minutes. And as you mark up a chart and you're trading the same 3 to 5 charts in your watch list, 3 to 5 charts, how much time is it really going to take when you already know what's been going on in this chart for months now, for weeks now? You know what's developed. You know what to expect. You know how it should move. You know what makes sense. And if you're a 20 to 40 pip person, you really can't fit in the 30 minutes a day of chart time and of entering the market and just letting it play, setting a stop loss, setting a take profit and walking away, setting an order and walking away. No excuses. All right? And like how I like to end every single video, happy trading.